Signed in 1787, the U.S. Constitution states that no state shall make anything but gold and silver coin a tender in payment of debts. In 1791, to help pay for the Revolution, Congress established the first national bank of the United States. Within a decade, it became evident that taxes were being sent to the Crown, and the bank was not renewed. A political battle ensued, which resulted in the formation of America's first two political parties, the Federalists and the Democratic Republicans. The framers of the U.S. Constitution left out any mention of political parties because they saw them as corrupt relics of the British Crown's divide-and-conquer system. The second central bank was chartered in 1816 and shut down in 1832 by Andrew Jackson, who wrote that the bank was unauthorized by the Constitution, subversive to the rights of states, and dangerous to the liberties of the people. For nearly a century, America thrived without a central bank, until 1914, when the privately owned Federal Reserve banking system was quietly given power over America's wealth. In 1933, the U.S. government declared bankruptcy, and the Fed shifted to a debt-based economy. And after the U.S. dollar was made the world reserve currency, the entire world became dependent upon debt. A currency backed by nothing but debt and IOUs was doomed to eventually fail from the start, and that day appears to be coming soon. These big banks have funded and criminally profited off human suffering for decades. Credit Suisse alone has been fined over 50 times for over $10 billion for money laundering, fraud, espionage, drug trafficking, and stealing money from the people. Every person in the civilized world is now feeling the same financial pressure, being subjected by the U.S. Federal Reserve Bank. Nations of the world are buying up record amounts of gold. 3/4 of the world have joined BRICS to prepare for a new world reserve currency after the end of the U.S. dollar. Zimbabwe and Mexico are now joining BRICS. But it's important to remember that the Federal Reserve Bank is operated by BlackRock. BlackRock is operated by the Rothschild City of London banking cartel. And so even if the Fed collapses, BRICS is most likely another proxy of this old banking cartel. The idea for BRICS was born in 2001 from Goldman Sachs. The Federal Reserve Bank's digital currency, FedCoin, is already hugely unpopular. CBDCs are being rejected upon arrival, but that isn't stopping the federal government and the failing big banks from luring the population into their new nightmare system. This July, the Federal Reserve Bank will be launching FedNow and managing practically every transaction made in the United States. Then all they have to do is what the Nigerian central bank just did: shred and destroy mountains of cash and stop filling the ATMs. But we're not slaves yet, and if we want to have financial freedom, then it's time to fight back against the CBDC concept and return to lawful constitutional money. Oklahoma has a law in the works that will protect Oklahomans from being forced to adopt a CBDC. And Florida is now working on a law that will expressly prohibit the use of a CBDC. Florida's Governor Ron DeSantis is calling on other state governors to do the same and fight back against CBDC nationwide. At least a dozen states have passed laws to begin accepting gold and silver as cash, on the path to returning to a lawful constitutional money system. Several states have begun printing their own gold backs, a currency shaped like notes made of thin layers of pure gold with a polymer coating, making it easy to spend $1's worth of gold. And the free market has been busy figuring out blockchain banking since the Bitcoin white paper. We don't need a central bank or a government to manage our money, but we have to act now and prepare.
It's going to be a very important show because I think by now people are kind of realizing for the first time that printing money doesn't work, and that's their only solution they got left. We come with different solutions. As they say, demography is destiny. So when you watch what the demographics are doing, you can almost predict the future. It's what's happening with the people is the future. And we're now in a triple bubble. We have a real estate bubble, stock market bubble, and bond bubble. I think people are finally waking up that something might be wrong.
$300 trillion, give or take, disappears in financial assets and doesn't come back for a long time. That's the big news. By my demographic analysis, the greatest boom in history. When I was predicting this in the 80s, people thought I was crazy, that the US could do so well. They thought Japan and Asia was going to take over the world. I said, no, that we still have a giant, one of the best baby booms in history coming along, and they're going to spend and earn a lot of money, and we're going to have the greatest boom in history from 1983 to 2007. And then 2008, of course, it did go down. And I predicted that 20 some years before it happened, okay? But forget that. Now, to print money for a year to overcome a strong downturn like 2008-9, I'd agree with that. 1 year of money printing. To be printing money 13, 14 years and escalating and printing and fiscal stimulus combined after COVID for 2 years, $10 trillion, half of GDP, is insanity. So this shows how crazy things have gotten. Governments we should have had, my forecast all the way back to the 80s when I started with my generation cycles and technology cycles every 45 years, the generation are more like 38, 39, and we'd have the greatest boom in history, but it would slow after 2007 and not come back with the millennials until about 2023, 24. Well, what we have now is we have the greatest bubble in history because governments fought the slowdown after 2008, which was very serious and would have been more serious and should have lasted into 2010, much like the 29 to 32 collapse. They just bubbled up financial assets. They haven't changed, incomes and stuff. They bubbled up financial assets, which means the rich, which were already getting richer in the greatest bubble boom in history, got even richer, and everyday people are still struggling. And now we have an economy, and I've been warning for years, I don't know exactly what's going to happen, but it's happening now. You can't do this forever. You can't just print money and grow an economy past its fundamentals of what I study better than I think anybody in the world. When do people earn and spend money over their life cycle? What's the life cycle of people, and how do generations, particularly the largest in history, at least the largest in 250 years, the baby boom generation, affect that boom and bust? And we are still in the bust wake of the baby boom's peak into 2023-24 before we can grow through natural causes. And I see that this government printing scheme is now failing, despite printing more and more, failing anyway, because you can't do this forever, and it's going to collapse, which is just in time for us to balance out the economy so we can grow again with the millennial generation from 2024 forward. So I'm happy to see this collapse. I'm happy to see a downturn, damn it. We should have had a bigger one in 2008, 9, and 10 and got rid of most of this bad debt. Now we have more bad debt than ever. We're going to get rid of it in the next few years. It's going to be painful.
So you and I agree on the causes and symptoms and what's happening.
We have the most common sense approach. I mean, it's not only factual, it's common sense that you can't just grow by printing money out of thin air. I mean, how common sense can it be than that? Printing money since 2009. This is insanity. You know what? Who are the most insane people in the world? People who get high, okay? It doesn't matter whether it's heroin or crack or alcohol. People get high and then they do stupid stuff because their brain stops working. The whole world is high on nonstop stimulus since 2009, and this will not end well. We went around from late 29 to 42 when it went down lower and lower and did not get back to even until 1953, 25 years later. That's called smoking crack. We're bouncing out of that. It's not that strong a bounce, by the way. I don't think it's going to last past this month if it has not already peaked. The proof of my concept, and I think Robert's here, obviously, if we see another wave down, which would be the logical thing, forget everything we're saying. If I'm just looking as a stock chartist, we had this first crash, a tepid bounce, and we have another one of the same magnitude. We're going to see 7350, on the NASDAQ, down more than 50% by late this year, early next year, and then people are going to know something is really wrong.
And that's for the baby boomers, because we were the boom generation. 1974, the government passed ERISA, which became the 401k, which is the biggest Ponzi scheme I ever saw. And now they're pulling the rug out from all the baby boomers. So the baby boomers are toast. So they were the boom, now they're the bust. How come people don't know this? What blocks them from knowing?
You believe what you want to believe because you want to believe it. The baby boom did cause, and I was the first one to say it, and it took me to the mid-'80s. I didn't get it in 1982 fully. This generation is going to go into their peak spending cycle all the way into 2007, greatest boom in history, going to make the 50s and 60s Bob Hope generation look like nothing, but then it's going to crash.
Okay.
So that's the problem now. It did crash And the bigger problem is government said, well, we're not going to let it crash. And I'm like, who the hell are you? A bunch of politicians that never did anything for a living, most of you, and say, oh, we're just not going to let the economy do what the economy will do to correct an imbalance of overinvestment in bubbles and financial assets and bring them down to normal so we can grow again. They're fighting it.
And I said the biggest crash was coming. It's here now.
And they're still fighting it, and it's still going to happen anyway. It's going to get worse than people think, even now when it's finally starting to go down despite.
Why do they believe these guys like Jim Cramer? Whatever Cramer predicts, you go short.
He's a smart idiot. He just entertains. He has nothing to do with the truth. All I do is research what happens in history, what causes things and what doesn't, and that's the truth. You do not get a bubble like this. There has been no bubble anytime in all of history that has not burst badly and rapidly when it does, and it's already started.
One of the problems is people choose the wrong prophet.
They choose what they want to hear. If you're in a boom and you're invested in the boom, I mean, everyday people didn't used to have so much money in stocks. It was more in real estate. And real estate does not go down like stocks does. Real estate is more stable even when it goes down. And everybody now has to root for this thing to keep going. And so they'll listen to the people that say, oh no, don't worry about this. Don't worry about debt levels. Don't worry about demographics declining, which they're declining at the speed of light in all developed countries in the world. Somehow the government will bring us out of this. The millennials bring us up through natural causes instead of printing money from 2024. And I'm very precise about this. I said from the beginning the baby boom thing was going to peak in late 2007. I said that in the 80s. That's how predictable people earning and spending money as they age are in generational surges. And the baby boom was a big surge. So, of course, a great boom. The millennials do not bring the upward natural momentum until 2024, and they will peak by 2037, much shorter boom than the baby boom.
Boomers were like 46 to 64 was a boom generation. There was a Gen X behind us.
Noticeably from 1937 into 61. That's the rising baby boom, which on a lag, predictable, quantifiable lag for peak spending at 46, moving towards 47, would have given us a peak in late 2007. I've been preaching that since the 80s. People back then were saying, Harry, you're crazy. The US is done. Asia's taking over. Japanese make us look like idiots, you know? And I'm like, yeah, they're growing and they're going to grow longer, but we still have the greatest baby boom in the world, and we're going to have the greatest boom in history until 2007, and then it's going to clap.
Who is Gen X and what's their challenge now? Because that's a large generation.
Gen X is the declining birth rates from 1961 into 73 to 75 that caused the slowdown from 2008 still into 2022-23 before the millennials born after them take it up. And even the millennials, here's the important point. Nobody gets this, okay? Even the millennials, with their spending power as a smaller generation, less long in births, only take us back to where the baby boomers took us. We only get back to even adjusted for rising productivity. We will never see a boom like 1983 to 2007 again in the US, and most of the developed world will never, and Europe's already behind us.
What's going to happen to Gen X? Because they're the sandwich right now. They're the spread.
Well, they're causing the slowdown, but they kind of benefit because when asset prices go down, eventually, which they aren't yet, when they do finally crash, they're going to be able to invest at more reasonable prices again and be able to invest for retirement. I tell you, anybody right now in the markets, whether it be bond markets at the lowest interest rates ever, long-term, or stock markets, the highest valuation, if you invest today, even with no predictions of up and down economy, you're likely to make a couple % a year for the rest of your life. You're not going to be able to retire profitably until the markets come down to reality and you can invest at fair asset prices again. This is a new trend everywhere. It's a good trend. People don't have to spend an hour or two commuting every day and sitting in the car. It's only more productive, okay? It's just that the millennials are causing, with less spending than the baby boomers who already peaked at age 46 to 47 before them, they're causing a slowdown. And instead of governments helping to restructure debt, we've got tons of bad debt now from the great boom from 83 to 2007 that needs to be restructured. They're encouraging people to keep that bad debt in place and not to reinvest in new industries and stuff. They're doing all the wrong things because they don't want to have a recession. You know what recession is to me? Sleep. Try not sleeping for 3 days and not become a crazy person. It's already proven. 3 to 5 days no sleep, you'll become a crazy person. We have to grow and expand all the innovation of the past, and we have to slow again and restructure and cut out losing companies and losing things and reinvest in the future. And governments are interrupting the free market capitalist system that has made us the richest and the greatest advance since the late 1700s in all of history because they don't want to have a damn recession. Greatest boom in history, and just when it needs to restructure, they screw it up so we can never grow again, because we never restructure bad debt.
We got to the problem. A lot of it just mismanagement of debt and printing money to solve problems and all this.
All of this stimulus on top of the greatest demographic boom in history, but which did start to fail. So all the stimulus throws money into the economy. What do governments do with this? They buy financial assets. They start with bonds, but the more money goes in bonds, it will trickle into higher valuation stocks and real estate, because that's where the returns are. So what we have now, and I got a number on this, it's close to $600 trillion in financial assets globally. That's about 7 times global GDP at 95 trillion. And normally financial assets are a premium 2, maybe 3 times. So the biggest bubble in the world is all financial assets, even bonds. And when you have a crash like this, when these financial assets start to crumble, the money has to go somewhere. It goes into the safest areas. So it is the income producing real estate, multifamily mostly, and it is the treasury bonds, the highest quality government bonds. If the US government can print enough money to keep a dumb bubble going, they'll certainly print money to pay their bonds off, their treasury bonds, okay? You don't have to worry about a default on 30 or 10-year treasury bonds. And again, I go back and say, okay, let's look at 2008. When I look at the 2008 crisis, that was like 1929 to 32 coming in, except this time, massive stimulus, which they didn't do back then. So they come out of it, okay? But that's when you see things go down, financial assets go down, flirting with deflation. This time we're going to deflate more because they've tried to pump it up and it's failing anyway. So financial assets keep falling. The money has to go somewhere. So what it goes into the safest bonds and the highest quality real estate, which is the people, again, the people who are renting real estate, multifamily, the people who will need it more than ever, even people who would rather buy, can't buy in a bad market and hard to get loans. Who's the best house in a bad neighborhood? Is Europe in trouble? Yes. Has Japan been in trouble forever? Yes. Okay. US is still the best house in a bad neighborhood. And our bonds went up in 2008 crisis, 45% treasury bonds, 30-year treasury bonds, and they're going to go up more than that this time. So you go to the safest places. Again, where can you get predictable rentals, even in bad times, from real estate? And that's from apartments and multifamily. And where are the best bonds that will be paid no matter what, when all financial assets have to go. And here's my number, from 600 trillion worldwide, they're going to have to come back down to about 250 to 300 trillion. Now, think about it. Globally, 3 times global GDP 95, $300 trillion, give or take, disappears in financial assets. So as long as you're protected from that in the right real estate and in the right bonds, the highest quality, longest term, if I could buy one thing, it'd be a 30-year treasury bond.
Okay, US government.
US, not Tanzania. Not even Europe. Europe has much worse demographics and already been slower than us. US, as a developed country, is going to come out of this after a damn near short-term depression, the best. And our millennial generation, Europe doesn't have one, by the way. It's going to be the best in the developed world. So we come out of this better. Our US treasury bonds, 30-year treasury bonds would be my number one right now.
Right. You just told me, why doesn't Europe have a millennial? What happened there?
Because they're older, they've been around longer, they've been richer longer, and people who are rich have fewer kids. Poor people have more kids and rich people have fewer. We should promote rich people having more kids, but the natural propensity, people that have a life say more kids ruins that life, and it's better to have 2 kids and be done. Poor people just keep having kids. When the crash happens, I don't want to hold 30-year treasury bonds at 1 to 2% yields or 0. I want to get back into the best part of the world, and it's not going to be North America anymore. It's going to be better than Europe, but Asia is going to be better than North America and continue to be. There's nothing simpler than demographics than that. We're better than Europe in the developed world, and as things move forward, all the growth is going to be in Asia, East Asia, going towards India, which after I die will be the richest, greatest, largest country in the world.
When interest rates were coming down, the prices of bonds were going up or something like that? Why is that?
Because if you locked in, like say a 5% 30-year treasury bond and yields now move down to 2% because of lower inflation, who's worth more, your 5% 30-year treasury bond or the new 2%? Your 30-year is worth a lot more now. So bonds appreciate when inflation comes down, especially long. It is interesting to study other places that have had, inflation and crashes. I mean, I keep seeing people say this is going to turn into hyperinflation. No, it's not going to take much more inflation. It's already crimping our economy and bonds and stuff, and that's already going to lead to a downturn. I'm telling you, when we see this downturn, I think we're already into it. It's already starting now. Inflation will disappear at 9.1% or 10% if it gets the hike, and never appear in the rest of our lifetime. That's a forecast.
Wow.
Never see inflation above a few percent for the rest of all of our lifetimes, even if you're 20 years old today. That's my forecast. Because inflation was the major baby boom, and that caused a huge inflation. And you know what follows huge inflation? The disinflation and the boom that follows from that generation that caused it, and blah, 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 blah. We're not going to ever worry about inflation in the developed world again. Hey, maybe Zimbabwe, maybe Africa, but we will never, high inflation will never be a topic after.
That's fantastic insight. Anyway, one more thing about booms and busts. What Harry's saying about the 30-year is basically you're getting ready to pick up more product whenever it is. So it's the same as us. We don't buy real estate when it's high. We buy it when it's low. The point here is that it's when you buy, not when you sell. And the reason I think a lot of real estate guys are going to get crushed are the flippers, because they still expect the price of real estate to go up. So they're flipping the family home, or they're taking out second mortgages on their home because the so-called value of the property went up. But real estate is also supply and demand. There's a huge shortfall of real estate in America. Demand is going up. So that's why residential is good as incomes come down. I mean, apartment houses are great because people are backing into apartment houses.
Take this seriously. We've had so many corrections now, and we've had this boom go since 1982 now. And even when it should have gotten a lot worse in the last decade, they propped it up. Be serious. You cannot have something for nothing economics work forever. And the fact that after the $10 trillion in combined fiscal and monetary stimulus in 2 years after COVID, we are already falling into recession again. If that doesn't tell you something's wrong, you better wake up.